You are listening to Wealth Talks, where we talk about solutions, money, and other things that create wealth in your life.
It is great to be here today. Have you ever started a new job, a new hobby, something totally new to you? You get into the field and the terminology is overwhelming.
Blows your mind.
The acronyms, it sounds like people are speaking Chinese. But as you get more familiar with it, things start to make a little bit sense. And before you know it, you're relating just as well as the people that have been in that field for years. You know, becoming a private pilot, I did that here a few years ago. You have a CDI inside your OBS that's on the VOR, but you don't need any of that if you're flying VFR. Now, those of you that are pilots probably understand what I was talking about, maybe not so much if you're not a pilot. So today we're going to be talking about life insurance. There's a lot of terms around life insurance. We want to make those easy for you. Ben McPhee, my brother, is here today with us to share a little bit more.
Well, thank you. It's always a pleasure to be in the studio, the Wealth Talk studio, recording this podcast. A number of years ago, our family visited a brilliant scientist in Southern Oregon. He was widowed when his youngest son was 18 months old. He had 6 children. He had to teach them all at home. They home educated their children while continuing his research as a scientist. He found creative ways to do this today. All 6 of his children have doctorate degrees. But I'll never forget when our family was visiting their family, we went into his laboratory. It was an amazing laboratory. There was a mass spectrometer in the center of the room. There were all kinds of vials, all kinds of studies. He's a chemist who has the designation of biochemistry because he studies the human body and what causes disease and early indicators of disease to prolong human lifespan. And as we were sitting there in his laboratory, he said something that was pretty amazing. He said, "You come work with us for a few weeks. It's just about learning the terminology. In a month's time, you would be doing experiments of your own." And although the protein molecule he brought out for our observation was kind of new and unique, him and his children seemed to understand it inside and out. They have terminology that did not make sense at the time. But he assured us that if we immersed ourselves in that for but a few weeks, we would be performing experiments within a month. And that's what it's like in many fields. Life insurance is no different. We happen to understand life insurance terminology very well. And that's one of the things we bring to you here on the podcast at Wealth Talks.
That's right. And Ben, you've written a guide on the best kind of life insurance. It's a PDF that people can download right from the life-benefits.com website. Just go to the homepage. It's about halfway down. Really, really neat guide. What are some things that people can learn? Can we cover the types of life insurance overall very quickly?
Well, there's just 2 basic types of life insurance. You can buy term insurance, which is just like it sounds, for a certain specific term or period of time. It might be 10, 15, 20, or 30-year term. And then after that, the price will become so costly that you won't want to buy that product anymore because it won't be worth the cost that you're paying for it. But in the meantime, it does provide a death benefit for you if you should die. So it's a good product to cover your liabilities. It's part of what we believe should be your living expenses, part of your living expenses, because those people that have families and like to expose themselves to advancement have risk in their life. And we want to make sure that that risk is covered with a life insurance policy in case you die. The price for it is very reasonable. Some people might say it's even cheap, but it's there providing just the death benefit. There's no equity built in it.
Mm-hmm. No life benefits
it's like
in a
renting.
term policy.
Renting insurance.
No life benefits, just death benefits in term insurance.
Exactly.
Now, there's permanent insurance, too. That's the second type of insurance. And, of course, there's 2 different types of permanent insurance. One is based on that same type of term insurance that we just talked about, where the cost of it is going to get very high. And so there has to be an investment portion along with that. Some people call it investment grade insurance, but it's really called universal life. And it can be a universal life that's variable, universal life that's flexible, or universal life that has a mirroring a growth of an index or some other indicator in the market out there like interest. And what happens is we're exposing ourselves to risk because it is an investment grade life insurance. And we're hoping that the investment part of the policy will help us pay those ever increasing cost of insurance when the term policy gets so expensive that we wouldn't be able to afford it.
I would like to highlight something you just said because this is not understood, period. A lot of times it's not even understood by life insurance agents themselves who should really understand how life insurance works.
You are so right.
And what you said is that permanent life insurance, or I'm going to say quote permanent life insurance. If you could see my fingers, you could see the quotes. Permanent life insurance, which is universal life insurance, is really not permanent at all. And why is it not permanent at all? It's because of what Dad just said. It's got annual renewable term insurance as its chassis. So when the term insurance gets so expensive that people aren't going to afford it anymore, what's going to happen? If you said the policy is going to lapse, I think you deserve an honorary credential of life insurance agent because most life insurance agents don't understand even that.
Yeah, listen to this podcast. You're going to know more about life insurance than the average agent on the street.
Now, you might have just heard a terminology phrase there, lapse. What in the world does lapse mean? I mean, in track and field, that was what the coach did when we were goofing off. We had to run laps, you know? But this one is really about your coverage just disappearing. There's no more money there to pay for it. You can't afford it, and now your coverage is gone. And so that permanent coverage that you were thinking was going to be there till the day that you died is gone before you die, and that's dangerous. So the second type of permanent life insurance is really permanent. It's got guarantees that it will be permanent because it's got a guaranteed level cost of insurance for your entire life. Whether you live to be 80 or whether you live to be 150, you've got this level premium that is going to be there for you. The price is never, ever going to go up. And that allows for you to build something called equity in a policy. Equity, we understand when you think about a house that you're purchasing. Every time you make a payment or an extra payment on a home mortgage, you have more equity in that home. And in life insurance, it's the same way. In permanent participating whole life insurance, every time you make a premium payment, you own more of the death benefit, and that then is the equity that is going to be able to be life benefits for you.
That's right. So I heard you mention a couple new terms there, participating and whole. So we've been talking about the life insurance. What do those terms mean?
You know, I would just say for the whole life insurance, that one is exactly what it sounds like. Your whole life.
It is.
And that is the really only true life insurance that is actually permanent, in my opinion. Because the others are built on term. How can term insurance be permanent? By its definition, it's only there for a term. And Dad, do you want to clarify what participating means?
Well, participation means that it's something that you join in along with. You know, if I participate in a group game in the evening, then I sit at the table and I take part in that game.
You're a participating party.
Yes. If I participate in a sport, then I become part of a team. Well, when we participate in a whole life insurance policy, we actually get to benefit from the profits the insurance company is making as they invest our premium dollars. So we get a benefit just because we decided to purchase this policy from a participating whole life insurance company.
And people that own whole life, not all of them understand that they can participate in the profits of the company. which is huge. So I cover that in the guide to best kind of life insurance that you can get from the website. What's the difference between just a plain whole life and a participating whole life insurance? And the difference can be huge.
It is. And in fact, is if you look at the guarantees between the two types of permanent life insurance, universal life and whole life, the guarantees are always much larger on a participating whole life policy. And of course, we want guarantees because life insurance or insurance in general is to eliminate risk. We want someone else to assume that risk. You don't want to take any risk on that isn't absolutely necessary. And participating whole life insurance is the product that you're looking for in that instance.
So what I was hearing you saying is the participating part of whole life insurance means that we get to share in the profits of the company if they do well.
That's correct, because these companies that are mutual, that means kind of like a co-op that we all work together. We actually own the company. They don't have shareholders.
Yeah.
And so you get to participate in the profits that they make above and beyond what it takes to run the company and to pay the death benefit claims.
Yeah, and that's above and beyond the guarantees. So we don't have any risk like shareholders do, but we get to participate in the profits. That's a win situation all the way around.
That's huge.
Very nice. So go ahead, Ben.
In addition to the death benefit of life insurance, there's also life benefits. And we can really boost those life benefits by riders that we put on the policy.
Ooh, riders.
Now,
there's another good word.
there's another term. So let's go back in time to a family vacation on the shore of Lake Tahoe, northern Nevada, on the California border.
So I'm sure you've ridden on a bicycle, a tandem bicycle you've seen maybe, or maybe you've seen one of those bicycles that's got a trailer with a little child riding behind, pedaling. Well, imagine this. I'm riding the big bike, and my youngest son, Jordan, is about 5 years old, and he's riding the pull-along. And he says to his mom, "Mom, I noticed that it's easier when Dad pedals." And that's
Very
what
observant.
a rider does on your policy. It makes it better. And it's no more effort on your part to put those riders on in many instances than if you left them off. And so it's important to know what riders you can have attached to your policy.
Yeah, you want riders that help speed up the process, not ones that drag, because obviously if you have one of those tandem bikes and the rider isn't doing the job, then you have an extra hard work to pedal along to keep it up.
And you want those riders to fit your needs or possibly your future needs.
Oh, certainly.
So let's talk about a couple of those riders that you really need to understand. The first rider is a paid up additional insurance rider. Some people abbreviate it as paid up insurance, but it is a rider because all whole life insurance will eventually get paid up insurance in it. That's the equity that builds. But if we add the paid up insurance rider to begin with, that equity builds much faster.
That's the living benefits that Ben was talking about earlier.
Yes, it is. And those living benefits are what allow us to use this policy, leverage it, not lose the growth that our policy is guaranteed to produce for us or the dividends that we're going to be able to participate in. And we get to use that money for something else. And that, John, creates velocity of money, which maybe you should define.
So the velocity of money, that's one of the things that we can use when we access the living benefits, the cash value. We can access that equity by taking what's called a policy loan. We're not actually taking our own money. They're just using that cash value as collateral for giving us the policy loan. Using that money, then, we can work with the velocity of money, with also what's called the volume of interest. As we use the money, maybe we're going to use it to pay down debt. Maybe we're going to make an investment with it. How quickly that money comes back to us, that's the velocity of money. How much it comes back with, how much profit it makes. That's the volume of interest. We want to get those two. You want to get those two working for you.
So there's another rider here that you will be very interested in hearing about, and it's called the waiver of premium for disability.
There's a story that goes with this waiver of premium for disability rider. It is such a great rider to have on a policy, in our opinion, that we had been writing it on most people's primary policy, assuming that the underwriters would allow it to be on there for many years now. Never had somebody had to use it until recently. We got a call from a man who unfortunately is a doctor but had to cut back his practice to only 1 or 2 days a week. Why did he have to cut back his practice? Because when his policy was issued, it was issued super preferred, which is the best rating that anybody in the world can get on a life insurance policy. This was a healthy man. Well, tragedy struck because he was diagnosed with Parkinson's. His tremor was getting so severe that he couldn't practice as a doctor barely at all. His income was suffering accordingly, and he wasn't sure if he was going to be able to afford his life insurance premiums. As soon as we found out with one call to the insurance company, we discovered that with his waiver of premium for disability rider, which we had included on his policy when it was written, they would take over paying his premiums for the rest of his life if he was disabled to the point where he couldn't bring in as much income as he had been used to. Furthermore, in addition to that, he had had the Parkinson's for over a year. They went back retroactively, reimbursed him for all life insurance premiums he had paid on that policy since the date of his disability. And they will continue to pay the premium for him.
This is such a powerful example of what it means for you to think about the future. Now, a lot of us suffer from the teenage mentality that it can never happen to me. And maybe we expose ourselves to a little bit more risk than what we should. But at the same time, life insurance is supposed to step in and cover that risk. And this waiver of premium for disability rider is one of the riders that costs so little, and yet it can protect you against the future incidences that could happen in your life that you have no clue today what might that be in the future.
Yes.
Costs so little and covers so much.
Yeah, and that's one of the ways that we can use some of the different types of riders. That's just two of them that we covered there today. Looking at these different life insurance policies, you might be wondering, well, what kind of life insurance do I have? Is it term? Is it permanent? What type of permanent? Is it the UL? Is it the whole life? Does it have any of these riders on it that you've been talking about? Well, this is new terminology. Some companies even have different ways of referring to these riders. They'll have slightly different names for them. So rather than trying to sort through all of this yourself, go ahead and contact us. Send us the policy. We'll do a complimentary policy review for you. Explain what it is that you have, so you can understand the terms that are in your actual policy. So start with the real thing. Exactly how it applies to you.
So call us at 702-660-7000 or just shoot us a text at the same number, 702-660-7000, if you would like to have your complimentary insurance review. We do a lot of those, and it's so helpful to people just to know what you have, that it is what you thought it was, or before it, you don't want it to be too late.
And having done a lot of these complimentary insurance reviews, it's really eye-opening but kind of sad. Some people think they actually own the good stuff the whole life.
Yeah.
And they say, yep, that's what I told him I wanted. That's what he sold me. And we say, well, let's have a look at it anyway because of some of the stuff we found. Sometimes it is the good stuff. That's always nice. But sometimes they got sold the UL. It's still classified as permanent. It shouldn't be. But it is, and their life insurance is going away. It's a matter of time. And if they don't catch it now, when they can do something about it, it's going to be too late, and they can't do something about it.
One other thing that's important when you're looking at life insurance is there's an illustration that goes with it, which it projects out the values, the guaranteed values, the projected values that include maybe some profits of the company. That's something that that we look at in a policy review. So that's one of the things that we'll have you bring. I'm going to include a link here in the podcast resources to our video that we have online on how to read a life insurance illustration. So you can get started with that. Of course, we'll look at the specific details on your illustration when you contact us for that policy review.
And when you watch that video, you're going to see exactly what kind of policy that you have. Many people have called our office horrified that what they thought they had isn't what they had. Of course, there's lots of people that have called our office to congratulate us for putting that video out, because now they understand how powerful the policy that they bought several years back is for them because of the life benefits that are in it.
There we go. So enjoy that video, those resources. Be sure to contact us for the policy review, 702-660-7000. Ben, any last words?
I would just like to encourage people that are listening to this and maybe don't feel completely comfortable with the terminology yet. Just stay with it. You know, if they're having a hang-up over something, they can call us or text us, help get past that. But once you understand this, it really doesn't seem that hard. And the knowledge that you have when you truly understand this can be used not only to help yourself and your family, but everybody else that you love and care about.
Very good.
Well, I think, John, the best writer that you as our listener have is us. Because we're here pedaling hard for you all day, every day, helping you to get the most value from your life benefit policy, both now and in the future. And so, and there's no cost for that writer. We're just here to help because we want you to be able to enjoy the life benefits of your policy while you're living and to maximize that death benefit once you're gone.
All right. We'll be back here next week. You are listening to Wealth Talks, where we talk about solutions, money, and other things that create wealth in your life.